Hi, Tim Kerin here from Mortgage Choice in Kingsley. Today I want to talk about one of the things that was changed in the recent federal budget that I think has the potential, if maintained for the long term by future governments, to make a significant cultural difference to how we view young people and first home owners being able to get into their first home. Specifically, I'm talking about the fact that you can now salary sacrifice or make pre-tax contributions into super for the purpose of withdrawing them later to put a deposit on a home if you're a first home buyer. To understand why I'm excited about it, it's worth just explaining a bit of what I see with my customers. So I help people through the process of investigating whether or not they can buy their first home all the time. And for the people I see struggling to make it work, there are two main hurdles. There's two main hurdles that anyone's got to get through to get it to work. The first is proving that you can afford the repayments on the loan you need to get. And the second is having enough deposit to make sure that the lender isn't taking too much risk and that they're willing to do the deal. Now, when people are in a situation where they do have the borrowing capacity, they can prove they can afford the repayments, and in fact they are capably paying a similar figure in rent, that's one box ticked. But the box people struggle to tick in that situation is, while they're paying rent, also saving up a deposit. And so we see a situation where, just by normal human behaviour, by people just being people, they struggle to get to the point where they've got enough deposit to make it work. And when people are able to make savings, a lot of the time, it doesn't take much to need to dip into those savings. We've all been in situations, I'm sure, where the washing machine breaks, or your car breaks down, or you are so exhausted that you need to go on a holiday, or Christmas comes along, or for whatever reason you decide to dip into your savings. With this new super contribution scheme, you won't be able to dip into it. So if you're making contributions to super for a home deposit, there's no possibility that it's going to be used for anything else until retirement. So all you've got to do is keep putting money in there, and at some point in future, enough will be there that you've got a deposit for a home. So what I'm doing therefore is imagining a world where people in late high school, people at uni, people studying some kind of a tertiary qualification, people going straight out of school into their first job, people leaving uni going into first job, young people being able to tick a box on a form once they start generating an income that says, yes, please set aside a certain percentage of my income to go into super, so that at some point in future I'll have a deposit. And then they grow up and they keep going, and 5 to 10 years later they've actually got enough money there to buy a house by default, simply by setting up that automatic arrangement in the first place. Now, this doesn't change anything else, that 9.5% of your income is still being contributed by your employer. But if we see it as a cultural shift and encourage each other and encourage young people to tick that box and automatically set aside a portion of their income, then they're going to get to the point by default where one of the major hurdles to buying a house has been crossed automatically. And to me, what that means over the long term is, instead of people getting to 25, 30, 35 and realising they don't have enough deposit, they'll get to that same age and realise that they do. And then all they need at that point, pretty much, is to also have a stable income, and they'll be able to buy a house. So I don't think that's going to make any massive difference immediately, but if we can encourage our young people to get into that habit and simply set up that automated payment, then in another 5 to 10 years, we're going to see, well, possibly sooner than that, we're going to see a lot more people that are capable of buying a home. And I think the broader effect of that, of having more people that are able to buy a house, should stabilise housing prices and should create a lot more opportunities. So I'm pretty excited about it. I'm excited to see where this goes, and I hope that this policy isn't removed by future governments and that it is kept for the long term, because I think it can make a big difference. If you want to talk more about how this change might affect you or someone you care about, your children perhaps, or one of your friends, just get in contact with me. I've done a bit of digging on the internet, so I have a reasonable understanding of how this is going to work. I haven't seen the mechanism put in place yet, but I'm definitely going to have my ear to the ground and keep abreast of the changes as super funds come to terms with how they need to manage this. So yeah, I'm looking forward to seeing what sort of change it makes. Thanks for listening.